following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from knowyouroptionsinc.com, and John Grigas from Options Express.
Welcome back to the option block, and we have the usual gang of suspects joining us on the panel today, as well as a surprise special guest. And starting off to the left, as always, man from the mountains himself, Mr. T, Mike Tusaw. How you doing today, Mike?
Doing well. How am I the man from the left? I didn't think we were political on this show.
You know, we try to convey a sense of spatial orientation on the show, so I just visualize you on my left. And I hope our listeners stayed through all the way to the end of the last show, because they got a little extra Tusaw treat there at the end, just for our listeners.
Yeah. You got to be careful about what you say on this show, I'm learning.
That's true.
That was quality stuff. That one will be around for a while, I think. And then the other voice we have chiming in is, of course, the greasy meatball himself, Mark Sebastian. Mark, how you doing today?
How's everybody doing? I know I'm doing great. So
we got to start pulling out some sound clips for you as well. I should go back and pull out the mini medals. That was a good one for you.
That was very funny. Oh, Lord.
And then we also have, in the rotating Options Express seat, we have Rob Kurzakowski. Rob, how you doing today?
I'm doing great. How are you?
Maybe we should start calling you Special K or something like that. Just give you your own little nickname. I know Mark's calling Tim T-Knob now, so you got to give you something a little bit special. So maybe you can be Special K, or maybe you can be a mini medal, whatever you feel like.
He could be Positive K, and then he could be like, I got a man. What's the man got to do with me? That could be Rob. We could Rob Special K, and that would be his intro music.
That one's a little too obscure even for me. And then we were joined in our special guest seat today by Jim Bittman. He is the major domo over at the Options Institute. Jim, welcome to the show.
Thanks a lot. I'm not sure I'm major in anything.
And listeners, you're going to find out a little more about Jim in a minute as we segue right into the interview block.
The interview block.
And welcome to the interview block. This is the segment of the show where we find some poor willing victim from the options industry, and we drag them onto the show, kicking and screaming, of course, and we pick their brain apart. And today's willing victim is Jim Bittman. He is the man among men down there over at the Options Institute. Jim, how are you doing today?
Pretty good, Mark. Thanks for having me.
Glad we can finally have you on the show. I know you're a guy we've wanted to have on for a while, and for some reason we just never made it click before, so I'm glad Mark could drag you on the show today.
You probably had better choices, be honest.
All right, so Jim, since it's your first time on the show, why don't we start off with you giving our listeners a little bit of your background in the options business, as well as what it is that you do over at the Options Institute.
Well, you know, when I was 30 years old, I decided that working in a bank was a dead-end job. And
So that was yesterday, right? That was a couple of weeks ago?
It was more than 5 years ago, let's just say.
It was in 1928. Just before
it was actually after 1928. But all these people, I was in Chicago, and all these people down at the end of LaSalle Street seemed to be having a good time. I mean, if nothing else, they were leaving work at 3:15 every day. And so I decided I had to get in the action, and I saved up my nickels and dimes, and I came down to the CBOE and started trading as a member. I was here for 3 years before I went to the Board of Trade. The grain room really has it good. They trade from 9:30 until 1:15, 5 days a week, if you can believe it.
They have a sweetheart deal down there, like the grains and the hogs and all those guys. Yeah, they're out the door by 1.
1:30 for sure. Yeah, but I started out as a part-time instructor at the Options Institute. They needed somebody to give floor tours and answer questions. And that just built and built. There's just been more and more demand for education. There's been more and more growth in the industry. And, we started out with nothing but gamblers back in the 80s. But people have realized that you can use options conservatively and consistently to not only protect your portfolio, but to increase income and to sometimes do wild and crazy things in a fairly risk-limited way,
Now, Jim, I know we've seen a lot of confusion on our website, especially from people who are coming into the options market for the first time. And they hear the Options Institute and they hear the Options Industry Council, and they kind of conflate the two and think you're kind of one and the same. So why don't you give some of our newer listeners a basic or a quick discussion of the differentiation between what you guys do at the CBO versus what the OIC does?
Well, the OIC does the very important job of building the industry from the ground up, and their target audience is investors who are almost totally new to options, people who don't really understand the concepts and who want to learn the basics and get an overview of some of the basic strategies, and really to have questions answered. So typically the Options Industry Council is a first step in a person's educational process. The Options Industry Council is the consortium of all the exchanges. So the Chicago Board Options Exchange and the other exchanges all participate in funding and supplying manpower to the Options Industry Council. Now, the Options Institute is specifically at the CBOE only. And our task is to work with many people in the industry, from regulators, individual investors, brokers, professional money managers, and we provide a wide range of educational services from basic to pretty advanced stuff. Now, we don't do the one-on-one coaching that Mark does. We don't do the hand-holding that Know Your Options does. Now, correct me if I'm wrong, Mark or Mike, but, our niche is really the second step after the Options Industry Council. I mean, one of many possible second steps.
Yeah, I would say so for sure.
Yeah, I think that's dead on, and you guys do a lot. I think one of the things that drew me to kind of starting to have a little relationship with the Options Institute was you guys did a lot of debunking of myths about the marketplace, where it was nice having somebody out there saying, "Hey, you know what? Market makers aren't the ones screwing you; it's you screwing you." And I really appreciate that. Now, Jim, to change it up, one of I think a lot of the investment community knows you from the Option Institute, but they may not know you as the renowned author that you are.
Yeah, renowned. Yeah, you and my mother have bought copies of my book, and that's about it.
I'll tell you, I really like your book. I think it's one of the better ones out there. Why don't you tell your latest book, Trading Options as a Professional, is geared, obviously, toward a little more advanced trader. Why don't you tell our audience a little bit about the book, what inspired you to write it, and how it's different in approach from a Natenberg or a Macmillan, and how it along those lines. So,
well, trading options as a professional has two goals. One is to explain to people how market makers trade, and I think what makes it different than a lot of other books is that there's a whole bunch of, practical step-by-step examples. Like I show people exactly what arbitrage is. I talk about put-call parity with a lot of specifics, and I talk about delta-neutral trading. So, and I also talk about how professional traders actually come up with the bid and ask prices that they come up with. And then the second part of the book, well, it's actually in the middle, but I mean the second purpose of the book is to really talk a lot about volatility, not from a mathematical point of view where we have formulas, because I'm not a mathematician, but from a practical point of view and how the option user, whether he's an individual or a professional, can think about volatility, how it impacts option prices, and how it impacts the different strategies that, the different people might actually do. So that's really what the book is all about. I mean, I wrote the book to compete with the Natenberg book, and that's an uphill battle, I'll tell you that. But that's okay. That's what the heck, you try.
Hey, we love the Natenberg book. I think that's the book that a lot of people, myself included, all kind of cut their teeth on when they first got into this business.
Yeah, for sure.
Every single trading group out there had just stacks of it. For whenever they hired a new guy, here you go home and read Natenberg. Not exactly the most scintillating text in the world, but it gets the job done.
Okay. Hey, I know you're up in the Institute, but how has the C2 rollout been for the SIBO? I don't know if you have any news or information, or you're up on what's going on with that.
I have no particular news other than what I hear around the building, which is that it's slow and steady, no surprises. The technology is working, and it's really. The individual trader is probably not even going to know that it's there, because it's designed to be an all electronic venue close to New York City, so that we can compete electronically with the New York exchanges. So in the professional arbitrage trading world, options has really become an arms race, where the biggest, fastest, best computer can get, a penny or hopefully 2 pennies faster than somebody else. And the individual option trader basically doesn't care about that, Let the big boys fight it out, just so I get, a quick fill at a fair price. I don't care about that last penny. So, but it's going fine.
And Jim, I know the SIBO did a big redesign of the website earlier this year, and part of that was a refocus on having more content, more educational content available online for your visitors, and that obviously includes the Options Institute. So I'm curious if you could tell some of our listeners some of the new features and maybe some of the new functionality that you've added online for visitors to the Options Institute, as well as maybe some things you have planned for down the road a bit.
Well, technology is changing, and you got to kind of keep up with the new world. But our website has more live webinars and more archived webinars. And we've got some online classes. We have a self-assessment. So you can go onto the website and you say, I'm ready to be educated. And you might think you know a lot and take our self-assessment and find out you don't know as much as you thought you did. But you also might find out, you know more than you thought you did, and maybe you're ready for a higher level of strategies or education than you thought you were. It's amazing how many people are really conservative when it comes to managing their money and trading, and a lot of people who know the basics still come to our basic classes thinking, well, geez, it doesn't hurt to get a refresher. Well, if you take the self-assessment, you might find out that you don't need to take the basics for the, third time or fifth time or whatever some of these people do. So between all of our online web offerings and our online tutorials, most of which is free, it's just designed to have a fresh layout, more content, and plus with the TV offerings we have and some other stuff, it's just basically more faster than it was before. That's the primary reason. Plus, in marketing, you got to have a new look every 3 to 5 years, right?
I
guess.
But Jim, I'm glad you could join us on the interview block today. I know we could all probably chat for quite a long time about all the different things you have going on at the Options Institute. So maybe we'll bring you on again for another interview segment down the road. We can go into some more detail on exactly what's going on over at the Options Institute. But thanks again for coming on. And if you feel like it, feel free to join us for the rest of the show.
Well, thank you.
All right. And with that, we'll roll right into the trading block.
The trading block.
And welcome to the trading block. This is the segment of the show where we discuss some of the interesting and or unusual activity that's going on in the market today, usually from a macro perspective, but there's a lot of other things going on. I know today in particular is not exactly macro, but we're keeping our eyes on it, of course, is RIMM. We discussed it a little bit on the last show. They have earnings coming out just after the bell, and of course they just came out a few minutes ago because we taped right at the close on Thursdays, and looks like the stock is up about $1 right now in the aftermarket. It's up to 61.25. So we'll keep an eye on it. It looks like it was down a couple of bucks, now it's up a couple of bucks. So typical vacillations, typical vacillations you see in the after hours.
They're probably waiting for the conference call, and that's really what's going to just determine what happens to the stock. But apparently sales of the Torch were pretty good. Much to many people's surprise.
That blows the doors off me. I mean, that's one of the reasons I looked at that straddle, and then the at-the-money D60 straddle was trading about 430 a few minutes before the announcment. And I was looking at it, and I was, that's one of those ones I would be terrified to sell just because I really have no idea where RIMM's going from here.
Yeah, no kidding.
You lean downside because the predominant sentiment on RIMM is so bearish. But then again, something like this, the Torch comes out of nowhere with surprise sales, and that could make the stock off to the races. So I wouldn't. Yeah. I would be leery of moving on this one in any way, shape, or form.
And I made the comment the other day that vol was actually dropping into earnings, and man, you could have bought 30-day out implied volatility on the 14th for 43%. You would have been a loser based on where RIMM is trading because it's only up about 2.25 at 61.5 right here. The way it's looking is, like they say, sometimes vol is cheap for a reason, and so we could definitely be seeing this stuff hit its lows. The low on RIMM vol was on October 22nd about 34%. I don't think it's going to get there, but it closed at about 46%. I could definitely see us breaking 40, so look out.
Yeah, they were pricing in, looks like they were pricing in about an 8% move for that straddle going into the earnings, and that's not unheard of for RIMM. Looks like they haven't done that yet, but we'll see. The night is young, so there's still a lot that could happen with this one. Yeah, if that Torch did better than expected, that really is surprising. All right, moving on. We'll keep an eye on the RIMM, and we'll move on to some of the other things that are moving the market today. The market closed a bit up. S&P closed up about 7.5 handles. Dow closed up 42 points, and NASDAQ up about 20, and the VIX cash down about 0.55 points, not dollars, Sebastian, so there you go.
Mm-hmm.
And looks like much of the rally was kind of based off of some surprisingly upbeat forecasts and guidance from FedEx. You'd think FedEx would be getting hurt in all of this international brouhaha that's going on, but apparently things are looking pretty well for them. They actually raised their guidance going forward for the year, so they had record volume overseas during the fiscal second quarter, which was surprising to a lot of people. At the same time, we had some mixed news coming out on the domestic front. We saw some mixed signals coming out of the Fed Bank in Philly. They said their general activity, business activity, had moved a little bit, topping forecasts, but at the same time, their other measures like shipments and hiring were down. Mixed results coming out of there. At the same time, the worries that have been simmering for quite a while in Spain seem to be boiling over a little bit more because Moody's is threatening to downgrade Spain's debt. So a lot preying on the market today, and surprisingly actually closed up with all of that kind of negativity out there.
Well, I think what's going to be interesting with the S&P, it's been tinkering around that 1240, 1250 mark for a few days now. I think over the course of tomorrow and then even into next week, it's going to be interesting to see if it can push its way through that or not, or if it turns around. So I think we're definitely at a pivotal point right now in the S&P. That's for sure. Were
you the one saying that 1230 was going to make it or break it level? They had to maintain 1230 for a while.
Yeah, I think that was another one that I'm looking at. It looks like they made it.
Yeah, looks like they did.
Yeah.
And Jim, I know you're busy educating down there in the options trenches, so to speak. But do you keep an eye on anything today? You trading anything in your own personal portfolios that you were watching today?
Well, I've been watching the 10% fall off in Baidu the last couple days, and I'm wondering whether this is technically based. Or whether, whether it's a pullback to support, or whether this could be, rolling over and an omen of other China stocks not holding up to these dramatic price-earnings ratios and valuations that we've seen. So that's the stock I was following today. I've also been looking at some oil companies. The OIH has had a phenomenal rise from, the 120 area to 135 in the last 4 or 5 weeks, and I'm just kind of drawn my support lines to make sure that I'm out of the way if and when oil, has any kind of a pullback. The oil's been strong because people are saying that the recovery is going well. And if the economy does get strong, then oil, of course, will be in, big demand. So that's really what I've been looking at. I've been looking at some of the oil stocks. I've been looking at ConocoPhillips. I've been looking at Chevron, Texaco. And I'm worried that all these things are topping. And the OIH I'm looking at as a potential leading indicator. And then I'm looking at a few of the Chinese internet stocks, a few of the Chinese stocks that have been such high flyers.
Yeah. I think a lot of people have been watching Baidu, and for our listeners who don't know, they are the Chinese equivalent of Google, and they've been the one who's kind of been, Google's been watching in the rearview mirror, kind of coming up on them, and especially with all this Google China stuff going back and forth. They've been a definite one to watch.
For sure.
Rob, you have anything else you want to toss in there to the trading block?
Yeah, kind of picking up on the crude oil. We're seeing that traders want to be bullish crude even when there's no reason to be bullish crude. We see the Cushing, the delivery point for the NYMEX. Their stockpiles have risen to just about 36 million barrels, which is the highest levels we've seen since August. So, we have more than enough oil on the market, and I think a lot of this is just a general bullishness in commodities and wishful thinking that, the economy is about to turn that corner and finally begin to recover. But when you break down the supply and demand fundamentals, I think crude may be getting a little bit ahead of itself. And we're seeing some of the other commodities, the high flyers this year, gold and silver have taken their lumps in recent days. And I think that may be the trend until the end of the year. A lot of these commodities have performed really well throughout the course of the year. Gold started off the year around $1,100 an ounce, and we're still flirting and are still hovering around in the well above 1,300, and we've been above 1,400 in recent sessions. So I think we're probably going to see some more profit taking. And in other commodities, sugar has been really strong, but that's one. Some profit taking at the end of the year. The money managers and the futures industry are performance based, so you may see them taking profits and waiting until January to establish new positions. So we're just seeing a lot of just kind of profit taking, and a lot of commodities maybe a little bit top heavy. Sugar is one that has really good fundamentals. Where we've seen major growing issues in India, who is traditionally a net exporter. In recent years, they've been an importer. Brazil has plenty of crop, but the problem is it's all stuck in the field because they've had issues getting with heavy rains. And now we're adding Australia and Indonesia to the mix. They've had some issues with rains as well. So. It's a bit of it's a market that is fundamentally strong, but I think we may get some pullback and ultimately create a buying opportunity for traders maybe later on in the year.
I don't know. You're saying gold and silver are going to take their lumps towards the end of the year. They might be fighting words to Tusa. I don't know.
That's crazy. That is crazy.
You mean these things are actually they have a potential to go down? Is that what you're saying?
No. Well, it's a real property. Just like a house. It can't go down.
Right. Real estate always goes up, right?
Right. And this is just like real estate. It's something it's a physical thing. So there's no way it can drop. So.
Right. I could see it pulling back a little bit towards the end of the year. I mean, I've said before, I'm a bull for the long term on gold and silver, and that's why we hedge.
Yep. Gotta love it.
All right, and that's going to do it for the old trading block, and we're going to roll right into the odd block.
The odd block.
Welcome to the Odd Block. This is the segment of the show where we discuss some of the interesting and or unusual activity that's coming across the tape today. And we're going to start it off with NASDAQ OMX, NDAQ, not a name we discuss from a volume perspective very often on the show. Maybe we talk about how they're competing with the other exchanges, but today they had an interesting move. Apparently, they said they're going to buy back about 30 million shares from one of their big holders in Dubai. That just drove the stock up quite a bit, and of course, options traders dove in. I should clarify, NASDAQ closed around 23.76, up about $1.23 or so today. This is the name that usually does about 900 contracts a day. They did over 8,000 today. The bulk of that was bulls. People are just loving this stock. We saw a bunch of buyers of the Jan 25, so these are near out-of-the-money calls. They bought them for about 38 cents a piece. We saw over 2,400 of those going up on the tape today, so about 3 times their average daily volume just in that one trade. Guys looking for about a 5% pop in the stock. Overall, we saw a not surprising bump of the volatility up to about 30.5% from 17%. And I don't know, Sebastian, you trade OMX at all?
You know, I look at it a lot. You know, the ironic thing about NASDAQ is that there's more liquidity in options on the NASDAQ than on the NASDAQ in NASDAQ. No, there is no liquidity in the stock. If you really want to get long, have a major position in NASDAQ without running the stock up, you literally have to go for the options. Every time I've seen every time I've seen the NASDAQ make a run, the options have proceeded not like major stock buying because the liquidity is so light in the underlying. So it's really strange, but it completely makes sense that the NASDAQ would do that. They've got a lot of good things going. The Philadelphia Exchange has been kicking the teeth out of the ISE and some of the other exchanges. The NASDAQ's OMX maker-taker option model is picked up 5% of the market, which is not bad considering that they basically take no risk and all they do is scalp dimes all day. They're doing a lot of things to replace that stock revenue.
Yeah, Philly really is the shining jewel in that crown there. Philly has just come on ridiculously strong. And, detractors like the ISE and Gary Katz will say it's all dividend volume, but there's more to it than that. And
there's some of those products that they've come up with have been really good. And you know what? The Amex gave, the interesting thing the Amex did was they did this weird equity deal where it's drawn liquidity back to the Amex at the ICE's expense. Right now, the ICE, I never thought I would say this, but right now the weakest exchange out of the ones out there is certainly the ISE from a, direction they're heading. They've been miles ahead of kind of the other exchange. Well, not miles. The SIBO caught up to them with the hybrid system, but the ICE has always been kind of at the front edge, the cutting edge of what's been going on, and they just shot themselves in the foot. So it's real interesting.
They've come under some rough seas of late. But yeah, NASDAQ OMX off to the races today, and definitely looks like a lot of these people were doing some stock substitution or just looking to get extra liquidity because the paper was so one-sided. Moving on to Winnebago Industries, WGO, another little one that I never came up on my radar till today when it popped up on our tape. This is the little name, does about 4,300 contracts. No, I'm sorry, 430 contracts a day, average daily volume. They did over 3,400 today. And as the name implies, they make Winnebagos, they make motorhomes and RVs. And they shot up about 15% today. They had better than expected earnings. And once again, we saw the predominance of the activity being bulls diving into the calls. Probably same problem as with NASDAQ. I mean, I haven't looked at the underlying on this, but I'm imagining the liquidity isn't too strong in Winnebago right now. So if you want to put on a bullish take and you want to maybe avoid some of this gapping up in the stock, and maybe the easier place to do it and more liquidity available is in the options. We saw a lot of people piling into the Jan 15s. So these are pretty much at the money calls right now. The stock closed $14.96, up about $2 today.
This company traditionally has one guy that does, 40% of the paper in the options. So some of that could have been him, but this could just be, some people seeing the earnings and liking them. But this stock obviously trades by appointment. And when I say that, it means doesn't really trade very often, but like many of these little issues, it has kind of one big player in it that traditionally plays a lot of the paper. But I'm looking today, and you know what? It was the majority of the paper was done in kind of sweeps. It would look like somebody was sneakily trying to actually sell this stuff. Is what it looks like. Now, I'm sorry. The guy bought it, then he sold it back an hour later. Crazy. Yeah, so we had some real interesting things going on, but this guy doesn't really, they have one big player, and then on a day like today, you'll see people come out of the woodwork, and you never know when a stock's about to take off. Winnebago could all of a sudden become some sort of real hot commodity in the trading world, and you'll see we'll be talking here in a month, and the open interest will be 10 times the volume. It can happen.
Another one to keep on our radar then is Winnebago.
Wujoo.
Wuggo. So, Mike, is that you? Are you the one gobbling up all this volume of Winnebagos?
My clients might drive Winnebagos, but I don't know if we necessarily buy the stock.
When Mike, my understanding was when Mike was an offensive tackle, the saying was he could drive a lineman so far that you could fit a Winnebago through the hole. Is that true?
There you go. Well, unfortunately for me, NFL stood for not for long, but nonetheless, it was fun to be there for a little bit.
Given all the concussions and crazy crap that's going on out there now, it's probably not a bad thing.
I'm sorry, what's that? Huh? What?
What were we just talking about?
We ran the option in college. Oh, yeah.
That could be another one for the two-saw soundboard.
I love it.
That could be another one for the two-saw soundboard there. I don't know. All right, and moving on then to Monsanto, MON. This one closed at $63 even. So this one does an average daily volume of about 32,000. So they're a fairly active name. It did about 46,000 today. And this one, I think we've discussed it a little bit on the past, or it's been on our tape popping up incrementally for a while now. We've seen a lot of long-term traders, long-term bulls picking up call spreads, verticals in April. It's kind of been nickel and diming them, picking them up. So a lot of long-term people bullish on this seed manufacturer. And today we saw some continuing of that activity. Saw traders coming in, picking up about 3,000 of the April 62 half calls. So these are in the money calls now after today's move. They paid about $3.58 each, and then they turned around and they sold out the 72 halves in April for 97 cents. So that netted out to $2.61. So that was 6,000 contracts of the volume today, and that adds up to what we've been seeing kind of over time. A lot of bullish interest in Monsanto, and a lot of it focused in verticals in April.
You know, with what's been going on in potash, Monsanto has massive takeover speculation rolling around out there, believe it or not. And that's why we're seeing a lot of this upside buying. There is, every day Deal Reported I feel like once a week Deal Reported is required to post the latest Monsanto buyout rumor. So that's probably part of what you're seeing in some of those back month options.
Yeah, people hearing rumors, not sure where the hell it's going to go up, so they roll out to April and give themselves some time.
Yep.
Rob, I know you play a lot in the ag futures. Do you play at all, or you watch any of these, these ag manufacturers?
Yeah, not as much recently because of all. I mean, we've seen the potash buyout rumors, and there was kind of that period where the stock just really didn't move much because it was kind of right around where that suspected buyout price was. But for a long time, it had a symbiotic relationship with corn futures. There's a lot of the fertilizers used, but not as much recently. We've seen some divergence, so I haven't quite followed them as much as I have in the past. Monsanto is a company that is kind of been it gets a lot of press, and then the volume kind of fades away, and then it gets that, like Mark was saying, it gets that fresh news, and we have customers that come in and trade it, and then we don't hear about it for another couple of weeks, and another buying flurry, and then it kind of dies down.
All right, and then a couple quick names to round out the old odd block here, and then we'll move on. Just looking back, some of these names we've been watching for a while, like Dollar General. Looks like a lot of idiots are still short those D30 puts, the ones that were dumped for about 15 cents. And if you look now at the open interest, there's still about 14,000 of them open out there. So people are not buying back these options, despite what we have said millions of times, where if you can get them back for a nickel, do it. That's part of the problem, where if you sell a put for 15 cents, it's hard to buy it back for a nickel because that's a third of your profits. But I'm looking here. Today's volume was only 10 of these puts, and there's 14,700 of them still in open interest. So these guys are holding on to them, regardless of the fact that it's a silly play, and this thing could move down quite a bit. So Dollar General closed today at 30.70, so moved up a little bit. So the chances are these puts won't come into play, but still, if you have a chance to buy these things back for a nickel and close off some risk off your books. I bought back some far downside in Chipotle today. It was way out of the money, but still, I know how these things move, and there's no reason to have a risk. Plus, it frees up accounts for doing other trades. You don't have to waste margin and everything else covering some needless risk that just to wait for that nickel to come in. There's an opportunity cost to that because you can't trade other things.
Right.
And then, of course, we have another name we watched on our radar. Our Radian radar was Radian Group. That one closed up around, I think about 783, 779 today, so down about 2 cents. And we talked a lot about people coming in and buying thousands of those Jan 9 calls in Radian. And after our show, the last show, that interest has continued. We saw about another 500 or so go up the next day. And remember, this is the name that did only a few hundred contracts a day. So that's substantial volume. We saw 1,000 went up yesterday of buyers again. And it looks like we're also seeing some activity now today where people are rolling or actually legging into the Jan-Feb 9 call spread where they're selling Feb for about 45 cents. And they usually bought that call in Jan for about anywhere from 35 to 40 cents. So they're legging in anywhere from like or probably around a dime, maybe 15 cents if they got good prices. So some of the activity is rolling out to Feb. And it's not that surprising when you got a 15,000 whatever open interest on the Jan.
I don't know why you would trade the Feb, why you would sell the Feb for 45 cents. I would buy the Feb for 45 cents before I would put on the Jan-Feb spread for short time spread for a quarter.
Yeah, I mean a quarter. They're not even getting a quarter. They're getting like 15 cents.
That's terrible.
Yeah,
That's
I'm not saying it's a trade we recommend. I'm just saying
that
this
is an awful trade, people. Don't be stupid.
Maybe the same people who are still short all those Dollar General downside puts are rolling into this spread.
For all those people short Dollar General tomorrow, I hope DG's down $2 tomorrow. I hope. So you learn your lesson. That's how I feel.
Tusa, do you have any announcements you want to make? Maybe that you're never going to Dollar General again, and we'll kick the stock down a bit.
I'll tell you what, I'm glad I'm not Sebastian's kid. He's like the Grinch over there, hoping that the whole world loses money to learn their lesson, or, it's Christmas. Be happy.
Mark was trying to stick his finger in an electrical outlet a little earlier today. So, what they say is you either let him shocker himself or you have to, slap him on the hand. So I took it further and punched him really hard in the head.
That's why he's a little slow with the language still. So your son is Mark Jr. then? Okay.
Yeah, he's the second. Yeah, no, for sure. Well, my wife and I named him after the person we both love most.
Oh, God. All right, and with that bit of narcissism, we will close out the odd block and roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express/Spread Block. This is the segment of the show where we discuss what's going on over in the Options Express land and what their customers are up to these days and some of the interesting inquiries they are receiving. And so, Rob, what's going on in Options Express land today?
Well, today the hot topic was the ETF dividends tomorrow, the quarterly ETF dividends. And what a lot of traders, that are in these credit spreads or even in these like bull call spreads don't realize is, if you get assigned on that short leg, you're responsible for that dividend. So we've been informing our customers about their potential liability, especially because they are pretty hefty dividends. And I've had quite a few people wind up having to exercise the long to get out of the position, because a lot of those spreads wound up being trading at greater than parity. So it actually like a dollar wide credit spread actually costs you more than $1 to get out of it. So that certainly piqued a lot of traders' curiosity today. Also, these big moves in Visa and MasterCard. Both stocks got pounded pretty hard today after the Fed discussed that they're going to maybe put caps on the debit card fees. And we had some traders that thought maybe these stocks were good value, so we saw some selling of puts. below the market, some January Visa 60 puts. MasterCard not as much because it is a pretty expensive stock. So some cash covered puts in MasterCard ties up quite a bit more capital.
Yeah, it looks like Visa closed down like 13% today. They got hit pretty hard, yeah.
And fundamentally that they are, pretty sound relative to a lot of the, the banks and other institutions because their business structure isn't all that complex. So, we had a lot of traders that thought maybe that this was an overreaction. Obviously it is going to eat into the profitability, but ultimately these companies have almost an oligopoly over the credit card / debit card industries. So, that caused quite a bit of initially panic when people saw that stock, saw MasterCard drop $25 in the matter of minutes, and now we've seen, and later in the day we saw some value buying.
Yeah, it's interesting that we're talking about Visa. In our proprietary portfolios at Know Your Options, we don't have any Visa stock, but we do have one client that's actually in it, just kind of like they came to us as kind of like a holdover stock. And I do like Visa for the long term. I still do, but I
heard your wife likes Visa more than you, though.
Amex, Visa, MasterCard, you name it. But no, my wife's very frugal. I'm a very well blessed in that I have a very frugal wife along those lines. But
there you go.
Anyway, with Visa, we've been collaring Visa as just kind of a way with which to make it so that in case we do have a day like today, you can actually have some type of protection from days like today. And it's been going pretty well. We've actually had fairly wide collars on it for the most part. But this is actually something we actually had, and this is an advanced investment term that I'm about to use as to what happened today. We lucked out in that what I just did yesterday was for the previous month's color, got out of the covered call, and I just left on the December 72.50 put. It was trading at like a penny, and so for the commissions, I was just going to let it expire worthless. And so I put on the January 70.85 collar on it. And so today, with this news happening, what actually happened was Visa went down, but not only did we benefit from the January collar, we actually had, once again, what I refer to as the advanced technical term, a lucky trade, in that D's 72.50 put that was at a penny yesterday is now worth $5. So with that, I guess the message that I want to convey from that is the importance of hedging, and don't wait another day in terms of if you think, well, I'll just wait till tomorrow to put on my hedge, or if you are trading in a protective strategy, don't wait till the next day. Because granted, today we lucked out, but I have plenty of stories from my years in the business to where it happened the opposite way, to where if I've waited a day, which I don't do anymore because of past experience, that the opposite happens to you. So if you're going to hedge something, if you're going to have protection in place, whether it's through a stop loss or protective put, don't wait till tomorrow to do it, because you never know when an announcement like this is going to come out. So sorry to chime too much on that, Rob.
That's a fantastic, just a good example of why, in your case, you left it open. But, if you're the guy who short that put for a penny and you're waiting for that last penny to come in, this is a perfect example of why you shouldn't do that. Those puts are at $5.50 now. And if you were that guy short them and you were waiting for that last penny to come in, you just cost yourself $5.50. So yeah, it's just we can't say it enough here. Don't get ridiculously greedy. Pigs get fed, hogs get slaughtered. This time, Tucson was the hog, and it worked out.
I wasn't even trying to be the hog. Someone just showed up who gave me a gift. I wasn't even planning on it. It would have cost me money to get out of this penny put.
Exactly. Why pay the money?
So I just said, okay, I'm going to stay in it. Might as well let it expire worthless. But
they shoved the trough in your face, and you were more than happy enough to eat.
I was like Randy on that movie, A Christmas Story. Show how the Visa piggies eat, and I did.
Nice. All right, Rob, now that we've hijacked your segment completely, you have anything else going on in Options Express land?
Well, kind of on that note, that's one of the reasons why we do offer discounted commissions on trades that if you're short, if the option's trading at under a nickel, we offer discounted commissions because of things like this, the Visa trade. Obviously, RIMM's moving quite a bit overnight. Don't know how many RIMM options going into earnings were trading under a nickel that were even remotely in range. But it's better just to pony up and pay that penny and not squeeze every little bit of profitability out of that short strategy.
For sure.
Yeah, and I'm glad OX does that, because that's something that more brokers should do. And in fact, I think those kind of trades should even be free. We should really incentivize people closing out those shorts, because it's good for the brokers and it's good for the customers. But
I agree.
At the very least, it should never cost you more than the trade itself to put it on to close it out.
And the risk group loves it. They don't like coming in the morning to just a pile of margin calls. So.
Mm-hmm.
Yeah, exactly. All right, Rob, thank you for that. And with that, we will close out the old Express/spread block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the segment of the show we discuss what's on our horizon for the next few sessions. I know I spoke last episode about RIMM was on my horizon, and RIMM we talked about earlier in the show, and now an hour or so later, it's still trading about 62.10 in the after hour, so up about $3 or so, nothing too crazy. So it seems like the consensus appears to be bullish. Yes, the torch did surprise everyone. Just goes to show you that, when the predominant sentiment on a stock is bearish, be careful, because anything even remotely positive could send it moving to the upside. So that's one of the reasons why I didn't come to play in RIMM today. I was more of a watcher. But yeah, interesting one to watch, and that's been on my horizon. That was probably the main one. What else are you guys watching for the next few sessions?
I talked about this today on the street, and it got kind of ended up on the flagship site and on the front page of Yahoo Finance today. Apple implied volatility is sitting on its 5-year lowest level, and historical volatility, realized vol, is also sitting on absolute lows. I mean, I've never seen Apple vol this low since it was trading in maybe the single digit. It is dirt cheap. So Apple vol is at the lowest level that I can actually remember watching it at. And the realized vol, even if you went high-low, their last earnings, if you took the absolute low and the absolute high and calculated a realized volatility, it would still be lower than where it's trading right now. The kind of traditional measure of realized vol is in the single digits. Something's got to give on this stock. I think that this thing is at some sort of, I think it's pretty cheap. If you go to thestreet.com, it's on the front page under, Apple, how to trade the volatility. And you can kind of read all about what I was saying. Now, from a macro perspective, I think that we have priced out probably 2/3 of Christmas already, if not the whole thing. I don't think there's a lot of value left in going in and trying to sell out ahead of Christmas. If you look today, the VIX closed at about, one second, I clicked away. The VIX closed at about 1739 today. I think it could touch into the high 16s, but that's about it. There's not a lot more to be made being short premium ahead of the holidays. So if you're short premium ahead of the holidays, I would strongly suggest taking off that premium sometime early next week, because what we could see, just like we saw ahead of Thanksgiving, was we could actually see people say this is an overreaction and come in and actually start to buy some of that premium. So those are the two things I'm really paying attention to, is Apple vol, super low, and I think we've about priced out everything we're going to price out of the holidays.
Let that be a lesson to you, Mark. Anything Apple related gets a ton of clicks. So you want to get on the cover of Street more often, the front page. You write Apple, Apple or VIX, they'll get you there.
Apple, VIX, or Option Insight, or talking about Option Insider Radio is what I found.
That last one's a given. You know, if you did a story about Apple and the VIX in the headline, my God, it would explode.
What about this? Option Insider Radio reports issue with VIX calls.
Don't even tease about that, because I don't think the internet is equipped to handle the amount of traffic that would come out of such a monstrous headline.
People would think that there was an internet attack because there'd be so many clicks. Oh, that's great.
All right, Tucson, what are you, besides Visa and your good fortunes in Visa, what else are you guys up to over at KYO these days?
Well, right now we really don't have any, I would say, buying opportunities. We're still looking at our general list of stocks, which I've mentioned thus far, but I'd say we're probably just getting some stuff ready for the new year, resetting our hedges, and continuing to keep on keeping on.
All right, and Rob, you have anything you're looking at for the next few sessions?
I think early next week we may have. We're probably just going to see more choppiness with the expiration tomorrow, and people resetting positions. Early next week for their January option positions, primarily traders trading front month. We have a lot of economic data to digest on a holiday week. With the GDP is the third estimate. It's not that big of a unless they make a major revision, it's not going to be a market mover, but existing home sales, durable goods, obviously initial claims, and the Michigan Sentiment Index and new home sales, all in a pretty short, in a short week next week. I think we're just going to probably see more choppiness with these sessions, these kind of grinded out sessions like today, where the market really doesn't know where it's going to go. It'll pick a general direction and just kind of just sit there for the remainder of the day.
All right, and I think that's going to do it for this episode of the Option Block. I want to thank all of our panelists, including Mr. Bittman, who had to leave us a little early for an options education emergency, but we'll have him on again down the road. Don't you worry, listeners. And so I want to thank you guys, starting with you, Mr. Tucson. I know you guys have a lot of webinars going on. You had one on Sunday. Any more webinars coming up?
We have one coming up this Monday night, and it is actually on hedging a stock. So if you're interested in hedging a stock and learning the pros and cons of doing it, stop on by knowyouroptionsinc.com.
And Mr. Sebastian, I know you had your SFO webinar. We should mention too. Right. We should mention the coupon code. What was it? OI 2011.
2011. We've got our level 2 future professional prep course coming up in January. The price is normally $5.99. This is a minimum 6-week course, meaning I'll add courses if I feel like. I'll add extra days if I feel like it. And I would strongly suggest checking it out if you want to really catch the full breadth of what we're talking about, and if you have aspirations of someday trading full time. So
for listeners, you will get $100 off of the full price of that 6-week course. So not a bad deal by any means, and it's exclusive to our listeners. So don't go telling your friends who aren't listening to the show. Only for listeners.
Exactly.
And by the way, Sebastian, I have a bone to pick with you. I'm looking here at your bio on thestreet.com at the bottom of your Apple list. It lists everything. It lists the street. It lists the options, PID, all that stuff. Nowhere does it say that you are the font of 80s references on the option block.
I need to update that. That is an older bio prior to when we started this. So
it also does not list that you were the bassist for the Mini Metal. So there's a lot of things you're missing in there.
No, that's true. I wasn't the bassist. I played the guitar.
Guitar and the didgeridoo, I believe, as well.
Correct.
All right, and Rob, anything going on over in Options Express Land that you want to let our listeners know about?
We're adding more and more accounts to our new beta trade ticket, which is kind of a free-form ticket instead of being locked down to these predefined, rigid order forms. It's going to give traders some more flexibility. You don't have to keep on, if you're trading multiple strategies, you don't have to keep on bouncing around between order forms. One order pretty much gets it all done. So keep an eye on that. We're enabling more and more accounts for it every single week. week. And hopefully early January or mid-January, we're going to have that enabled for all accounts.
And I will say, too, I've been playing around some more with the Extend platform. It's been a few months since I fired it up, and I fired it up again over the past few weeks. And a lot of the upticks and improvements you guys have made to it have really shown through. It is even as easy as it was to use before. It is even much easier to use now. And I think a lot of the customer feedback you guys took to heart was fantastic. And I finally figured out today how to turn off those audio alerts, because it kept warning me every 2 seconds about a new 52-week high in some stock I'd never heard of. And I finally said, okay, I found where the alerts button was, and I turned that off, and now it's a much better experience for me personally. So listeners, once you turn off those alerts, it is a beautiful thing.
Oh yeah, Rob, do you want to tell them about this custom chart feature that's going to be coming out?
Well, actually, on the Extend, I just got the early pre-beta release of it today, and I haven't had one of the systems people come down because I don't have admin access on my machine to install it, so I haven't been able to tinker around. But you are going to be able to. It's going to offer further customization of charts. Previously with Extend, or the way it's set up right now, is it launches a chart separately. It's going to integrate charts a little bit more with the Extend platform. Also with Extend, we're going to have some major UI changes. The user interface is going to be a little bit cleaner as far as look and visually appealing, and it's going to be a lot more intuitive. So for new traders that are just downloading and installing it for the first time, it's not going to be this as intimidating as it was previously. A lot of our traders, Options Express is the first online broker that they've ever used, and this would be the first standalone platform that they're using. So we just try to make some revisions to make it a little bit easier for newer traders and a little bit quicker for more experienced traders. So that's going to be something that's just around the corner. Again, I'm pretty much one of the first people outside of the development group to get those pre-beta releases, and so I just got it today. So we probably expect that early to mid-January, barring any setbacks.
All right. Well, yeah, I definitely encourage our listeners to check it out. All right, that's going to do it for this episode of The Option Block. I want to thank all of our listeners for downloading and streaming and subscribing to the show. And we'll see all of you next time on The Option Block.
By the way, I don't hit my kids. Just an FYI.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.